going to go ahead and get started here, and I'd like to start by letting you know that I am Mary Ellen McGonagle, and I am the founder of MEM Investment Research, and I'm glad that you could join me today. I look forward to helping you become more knowledgeable about how to trade news in the market so that you can have an edge, and this edge will help you outperform the markets. So let's go ahead and get started. I'll give you a little bit of background as far as who I am. As mentioned, Mary Ellen McGonagle, and I started my career many years ago in the 80s. I moved to New York out of college and very, very luckily was able to secure a position on the trading floor of Goldman Sachs. I had befriended a gal who was a headhunter. She was able to get me an interview, and it was just a really, really incredible experience. Of course, the excitement, lots of money, changing hands, really, really quite compelling. Growing up, I really didn't know a lot about Wall Street. I did have a love of numbers, and to have that opportunity was really golden. And I did leave Goldman. I was kind of a low man on the totem pole, but I learned quite a bit. And I left to go to what's called the buy side, where I became an assistant portfolio manager at a very large insurance firm. And that was where I got a sense of when you ran a lot of money, you were privileged to receive information prior to individual investors. Now, this was during the 80s. When I was running money, I was running over $2 billion, and so I was privileged to information, nothing illegal, of course, but the systems were not in place then that are now, where since then the SEC has stepped in, and the knowledge that's available to individual investors is incredible. The doors are wide open. I think it's really, really exciting over these past 10 years. So now individual investors can have that same access to information, and you can trade on that information, such as news that we're going to be covering today. And really, really just a great time, I think, to be in the markets, because as an individual or self-directed investor or even wealth managers, you can trade the markets in a much more nimble fashion, and you can then by that be able to take profits quickly. So a lot more advantages in your favor, which again is really quite exciting. So I did leave New York after 8 years and moved out to the West Coast with my then new husband. I joined William O'Neill and Company, which many of you may know. They are also the founder of Investors Business Daily. I was in a different department. It was called Institutional Marketing. My job in that role was to work with portfolio managers, analysts around the globe, and teaching them the O'Neill methodology, and then also working with them as far as advising them on the markets, on their stocks, on what stocks looked poised to outperform. A lot of my time at O'Neill was spent studying charts, and I absolutely loved it. Believe me, the first time I saw one, it was almost hieroglyphic, but as far as difficulty to determine what was being shown. But over time, and I will tell you this as an investor, if you take the time, read charts, look at them. I was reviewing and still do thousands of them every week, and over time these charts will speak to you, if you will. And when you can put your ability to read and garner information from the price charts, when you can put it together with the news, then you really are well ahead of your peers. So again, today we are going to be going over news and how that drives stocks. And then currently I am founder of MEM Investment Research. I put out a top performing weekly newsletter. It currently is still going to institutional advisors. I've opened it up to self-directed investors, which is very exciting for me to be able to share my many years of experience. And with that newsletter, we talk about the broader markets currently, where they're headed. We also provide individual stock picks. A lot was to do with sector rotation, and then there is an intra-week report that highlights a stock that may appear to be poised to move. So that is where we are now. So let's go ahead and get started. Before we begin, I'm not going to read this entire thing, but it is a disclaimer. The primary information that's in here is that any investments that we discuss today are for educational purposes only. They're not a recommendation to buy or sell any securities, and that's really the most important piece of information in this disclaimer. So I believe I mentioned what we will do is first I'll review what we're going to be covering, and then we will go ahead and get in and look at individual examples, and I think you'll find this very educational. The first item that we're going to cover is what news items should you as an investor either buy a stock or sell a stock on. Which news item is going to be most impactful, and we will get into that. Secondly, how do you as an investor stay on top of these news? You have a busy life, or maybe you do sit in front of your screens on a regular basis, but you do need to have a system so that you really are on top. There is quite a bit of news that comes out regularly, and again, we're going to review that news which is more impactful than others. And thirdly, I will share with you one key news element that always dictates the broader markets. It's a very key, important element, and as you know, I've said this again and again, when investing in the markets, you want to make sure that the broader markets are healthy, that you do have that wind behind your sails, so to speak. So we'll get into news that impacts broader markets. And lastly, using history as a guide, and that's where we're going to get in and look at a lot of examples. A lot of them are going to be current, so they will resonate with you. And then lastly, at the end of the presentation, there will be a special offer, so I'm urging you that you do stay to the very end. In addition to the entire piece being very educational, you will want to stay to the very end. So let's go ahead and get started. I mentioned that we would talk about news and how you as an individual investor would know what particular news items really count, what's really important. As you know, the markets are always reporting news, whether it's economic data about the economy, either nationally, globally. It could be company-specific news. But the real key is knowing how to filter out the noise and focus on what news really is important. Not all economic data is going to be critical, and not all company news is impactful. So today we will go over particular news items that I have found over my many years studying the markets and studying charts to uncover for you which news items tend to be the most impactful, and then the news that you really need to pay attention to, whether it's regarding a particular stock or the broader markets. So the The next item I mentioned is trading on news that's not real. And what I mean by that is oftentimes rumors will be floated in the markets. It could be perhaps a potential upcoming acquisition or a potential release of a product. So stocks will trade on rumor. I want to remind you of an expression. It's a long-held Wall Street expression that states buy the rumor and sell the news. And oftentimes that does bear listening to, because oftentimes, and other types of rumors could be classified as an analyst might come out and say they believe a particular company is going to come in with a good quarter. Maybe they think McDonald's is going to have a really good quarter. Well, until that's proven, that would be a rumor. Stocks will trade on that rumor, but oftentimes once the news comes out, as for instance, if McDonald's were to come out with a good quarter, investors will sell on the news. The news is out there, I'm going to take my profits. So that is one item to remember. However, I will tell you, if a company does report a stellar earnings and they guide higher, you're well advised to stay with that stock and not sell on the news. The other item that, in talking about the broader markets, as you know, they are moved primarily by fear and greed. And this has been uncovered over many, many years. And oftentimes, news can bring these fear and greed emotions out in people. And that, in turn, will impact the price of a stock. So again, as we dig in, I will uncover what news really does matter over the longer term for investors. And then the third item is, how important is volume? And I'll tell you, volume is very, very important. And this is because if your stock trades on well above volume, if it is on news related item, that tells you that the news is important and it's impactful. So with that, the resulting move in the stock, if it begins on volume, oftentimes it will last longer. So this volume indicates that the big guys, the institutions, are in there. These they have the money that is going to really determine whether a stock goes up or down. So if it's on volume, that is going to be critical. And then lastly, how can you stay on top of your stocks that have made the news? And I wanted to, if you want to jot this down, there are several free services that I would tell you to use or look at if your current trading platform does not provide you with a platform where, if you have a list of stocks, the news impacting those stocks should be directly below it. But one service is Finviz, Finviz. I'm not being paid by any of these, but I just want to alert you to them. This particular website, you can put together portfolios or you can look up stocks individually. Either way, beneath that stock list or name will be any relevant news that has been released, whether it's a press release or analyst upgrade or downgrade. Another really good service is Market Watch. They're part of the Wall Street Journal. And what they do, for if you were to provide them with stock, they break the news down into 3 different categories. The first is Market Watch News, so any news that they've put out on that stock. They have a second category, which is press releases put out by the company. And then the third is what's called other news, so other outlets that put out news. And then they also provide you with a box with analyst recent thoughts on the stock. And that's all on one page. That is actually quite useful. And as always, you do want to have a system in place where if the news that is reported about a particular stock is negative, you don't want to be caught off guard. And we're going to get into a couple of those examples. I stress this quite a bit in all of my webinars and tutorials, the need to have a stop loss system in place, because the markets, as we all know, are in no way predictable. But most importantly, you do want to preserve your capital, preserve your profits. So not all news out there is, of course, going to be good. So you want to provide yourself with a safety net in the event of any negative news. There was one other item that I didn't mention, and we will review it again, as it relates to volume and how important that is. I would urge you to have an up on volume screen that you run, and it could be intraday, it could be at the end of the day, but this up on volume screen will put you in front of stocks that are trading on volume that is above their normal average, and oftentimes it will be news related, and it will drive you toward a stock that you might not otherwise consider. The institutional markets tend to run, they're not on top of the markets for the most part. Big portfolio managers are not in front of the screens all day, every day. What they tend to do is run up on volume weekly screens. So they're looking at week over week volume, what's moving, and that can direct you not only toward stocks but toward group strength as well. And that's another topic. So let's go ahead and dig into our examples. And this very first one is Netflix. And what we're looking at here is a weekly chart. So each price bar here represents 1 week of trading activity. And I'm taking you back to the very beginning of 2011. And as some of you may recall, the period leading into this was a very strong one for Netflix. They had just outplaced Blockbuster, which was a brick and mortar, of course, where you went to go and check out movies. Netflix initiated delivering them right to your door. And so they were on a great tear here with growth. And they made an unfortunate mistake in this. Toward the middle end of that 2011 period, the company introduced a very, very unexpected rate hike. They had just started doing live streaming as well as delivery. They split that out and were charging separately, and people just did not like it. And what they found, what happened was they lost many subscribers. The street did not like it, so you can see that the stock plummeted, and it went down quite a bit on this news. So what I want to review with you is, of course, how when these stocks break, you want to pay attention to key moving averages. So here we are breaking the 50-day, which is the red line, on very big volume. That's telling. Then the stock breaks the 200-day moving average again on very big volume. So if you weren't out of the stock here, you should have sold it there. And then your third item is what's called the death cross, when that 50 crosses the 200. But using those news items together with the price chart will keep you out of harm's way. So let's take a look down here. This is taking us to the end of 2011, and the stock is at this point deeply undersold. So at some point in time, you would look for some sort of news that would potentially cause the stock to turn. For some reason, it didn't make the chart, but in the very beginning of 2012, the CEO Reed came out and said, "We blew it." The other mistake that the company made here is they kept quiet. They didn't come out and reassure their clients and reassure their investors. So in this period here, the CEO comes out, admits the mistake, talks about all the great things coming forth going forward. So in a deeply oversold position, the stock did rally, but I want to point out that the longer term trend was still down. So this may have been hence a short-lived rally, although profit certainly could have been made. But the other thing that was going on here, I'm taking you to that 2012 period, because of the loss of subscribers and because the company was putting huge amounts of capital into expanding their live streaming capabilities, the company throughout this period was releasing negative earnings. So you can see as a news item, negative earnings are really going to negatively impact you in quite a substantial way. These are weekly, and you can see the drops were quite big. So let's take you here now to December of 2012. And again, we're in an even more oversold position. The stock attempts to rally. This particular news was the company partnered with Disney, and it was an agreement to provide live streaming using Disney media products, and that was the push that really helped to start to turn this around. And as the stock broke above the 50 and then up above the 200, it indeed became the beginning of a much longer rally. So again, news back here, the CEO comes out, short-lived, your longer term trend is down. This news is again company news relating to an alliance with a large company, and you're using these key moving averages as an indicator that this is for real. Now, this is their release of the first quarter. This is taking us into 2013, and the stock actually initially went up 40% the first day, but it went up 70% in total on this positive surprise. Very, very surprised the street. So in addition to responding to this, there was quite a bit in the way of short covering as well, but you can see your largest response to date is relating to earnings. So as the stock continued to progress during this entire period, the company continued to put in very, very strong triple-digit earnings. So that is, again, this is the release of an earnings. Your biggest upticks are earnings related. So as we move down, we're getting closer here to the end of 2014, and the company is coming into tougher times. They are having tougher comparisons to this explosive growth, and they come in with a weak earnings report. The stock drops 20% on that news, and yet here we are, the next quarter, they come in with positive earnings, and you can see another 22% move. This was a 30% move on earnings. What I'm quite simply pointing out is the impactfulness of earnings, be it negative or positive. As we get more into other examples, I'll point out to you the relevance of news releases relative to where the price is historically. So let's go ahead and take a look at this next example. And here we're looking at Microsoft, and this is a daily chart. It's taking us from March of 2016 to August 2016. And what I want to point out here is, again, how critical earnings reports can be. This is taking us to the end of April of this year, and the company was moving along. It was trending, reversing its downtrend after that horrible January-February period, but it came in with a poor report and the stock gapped down, and look at that volume. So that's going to tell you that this move down with that volume could indeed last longer, and it did. But let's go ahead and take a look at, because all of this is a period when the company is still digesting this weak earnings. So it's kind of meandering. We're not getting any kind of an uptrend. But here we are, if you may recall that in the middle of June, Microsoft announced that they were going to buy LinkedIn. And unfortunately, the markets and investors did not like the news. They did not see the value that Microsoft saw. So the stock in this particular case sold off. I will show you some other merger activity, and you'll see that oftentimes that type of news is short-lived as far as the market's reaction. They don't like it. Microsoft came out with with comments to ease their fears, and the stock did resume its uptrend prior to that acquisition. This is the Brexit vote. But let's take a look here. This is another earnings release. So unlike that negative, here we have a positive second quarter earnings, and the stock gaps up on huge volume. And this is the middle of July, and as you may know, since that period, the stock has trended higher, again, indicating and showing you the impact that earnings reports really have, as opposed to, in this case, an acquisition event. The other thing I did want to point out is this is LinkedIn, and here is a look at how this particular stock, unlike Microsoft dropping, LinkedIn gapped up. And you will see this for your own notice, that when there are mergers, oftentimes the acquiring company's stock will drop and the company being acquired will jump. And in this case, the stock gapped up 45% on the news, and that is typical. It oftentimes won't be quite this much, but again, the acquirer will tend to either go flat, drop, maybe go up a little, but it's the company that's being acquired that oftentimes will jump in price. And then here's another example of a merger and earnings, and then also industry group news. You're going to want to pay attention to that. Yet another piece of news that you will want to pay attention to. So what we're looking at here is a daily chart of Sherwin-Williams. They are a paint company, and again, this is 2016. We're looking at the beginning of March until the end of August. And in this particular case, Sherwin-Williams decided to purchase Valspar Corp. And you can see, and that was another paint company. Again, the investors and the markets did not like that acquisition, but here again, one day drop, and the stock did again resume its uptrend that was in place prior. Valspar, on the other hand, rose 22% on the news. So again, another example of the smaller company being acquired having a bigger move. So here we are looking at Sherwin-Williams. The other item that I wanted to point out to you is this particular drop is Brexit related. We'll see a lot of that. But this is something that happened, and since we're looking at it now, I wanted to point out, during that Brexit unexpected vote, caught everyone off guard. The U.S., certainly as well as global markets, really reacted strongly. They plunged. I was getting quite a number of phone calls from some of my hedge fund clients, and who were naturally unnerved. The volume on this drop was big. There was no indication that it would end. But this is where, if you can take a step back and really assess. At that time, I was advising clients that the impact would not be big. If you looked at the GDP of the UK, it was not hugely relevant to the global markets or the US markets. Their impact to the GDP, our GDP was nominal. So In fact, I've gotten feedback more recently from clients thanking me for keeping them calm, if you will. But on these bigger drops, it does help to take a step back and really assess the true impact. But let's get back to Sherwin-Williams. And what we're looking at here is very similarly to many stocks. And the markets have really recovered incredibly from this Brexit drop. And in the case of Sherwin-Williams, I would argue none of this is news related, that the company really got back on its feet, and almost too much, because here we're looking at a stock that is due to report, and the company just keeps rallying right into that earnings report, even to above where it was in that April period. So, and then during this particular uptick, Morgan Stanley and several other major firms were raising their earnings outlook and their guidance into the earnings. So what I'm trying to point out here is this stock at this point is pretty much priced for perfection. If the company comes in with any kind of number that is not absolutely fantastic, it's going to be trouble. And sure enough, not only did they not come in with good numbers, they came in with very poor earnings, and they also had poor sales. The company also came out and guided lower, saying that they don't expect their earnings and sales to recover going out to the end of this year. So indeed, the drop was significant, fast, furious, huge volume. If you owned the stock, you would have been advised to get out. We did get a little bit of a attempted rally, but what I wanted to point out, I mentioned to you industry group news, and this particular drop here over the last couple of days is related to the fact that some of the home improvement stores have come out with their numbers this week, in particular Lowe's, Home Depot. They were not particularly good. Sherwin-Williams and Valspar provide to those stores as well as many others, and it was an indication that home improvement is not as robust as it once was. So now industry group news is impacting yet another piece of news that will impact a stock's price. So let's go ahead, and here is an example, again recent. We're looking at Bristol Myers. This is a daily chart from March till the end of April. And Bristol Myers was, well, it still is, but it was a great stock as far as performance, as far as outlook leading into this. The company at this time had over 100 billion in market cap, and there's a reason I'm pointing this out. As a big company, they were a top holding in many very large mutual funds. Without naming them, this is something that you can look up via Morningstar and other services, but they were huge, huge holdings. The point here is when these mega cap that are widely owned by institutions, when they do come out with very unexpectedly bad news, the response can be very, very severe, and we did see that. So in this particular case, Bristol Myers had a drug called Opdivo. The outlook and the expectations for this drug were monumental. They were expected to be a first line of defense against many cancers, and however, it was expected that the revenues wouldn't be realized for 5 years from now, but still the company was highly regarded. But it's another eye toward institutions having a longer view. They were supporting the stock in here. So the company does a clinical trial. The results are not good. and very, very unexpected. So you can see the stock dropped well over 30% in one day. The volume was over 1,000% above its average volume. So that's these big mutual funds and institutions coming in. The other thing I wanted to point out is there was an expectation. Sometimes you'll have these big gaps down, and then the stock might try and find its way up, but sure enough, the selling has continued. It's continued strongly as many of these big funds are exiting the stock. This is their footprint. So it's going to be a whole different game when you have huge unexpected news in a big mega cap stock. So let's go ahead and take a look at the next one. This is Tesla, company a lot of you I'm sure are very, very familiar with. And this is a weekly chart. I'm taking you back to 2013 and the middle. This is August period 2013 till current. And what I wanted to point out to you is this is a company that is very much in the forefront of the news. You'll see a lot of news reports about the company, about Elon Musk, proposed orders, and so forth. And a lot of it is it's either reporters that are creating stories, but it's a lot of noise. And so what I want to point out here is significant items that did impact the price, but also how important it is to pay attention to where the stock is positioned at the point in time when an announcement is made. So again, we are looking at Tesla, and during this period they have been spending quite a bit of money on development, expansion, and so forth. So this is taking you to the end of 2014 into the beginning of 2015, and the stock really was meandering. It was close to making a one-year low in price. My point here is the stock at this juncture was oversold. You can see that from your MACD. If you use that, it's below your net zero, and also your RSI is below that zero. So we're in a very oversold position. And by that I mean, in essence, any kind of news could really pick the stock up. And in this particular instance, the company reported that they were going to be coming out at the end of April with major news, and also in attendance at that news conference was going to be BMW and Intel. So immediately investors put that news together that there could be a joint agreement for driverless vehicles. So that company coming out and announcing that on April 30th they're coming out with an announcement caused this gap up. So now we have the gap up above 50-day on big volume, and again, I am pointing this out because had the news come out and the stock was positioned here at what was then an all-time high, I would argue that the response would not have been quite as robust. But here we are, we're oversold, and this news just takes off. So here the company actually does come out with the announcement of their pact and their agreement to work together. And then the company likes it. We're up above the 50, the 200. We're getting nice volume. Well, here is another type of announcement, and it's important that you pay attention to it. It's when a company announces a proposed secondary offering, and by that means that in this case Tesla is looking to raise funds. They need funding for their to be able to expand operations, and what that means is more shares will be released or will be sold, and that in turn really weakens the hand of existing shareholders. There are more shares, so that it impacts the price. So in this, I'm pointing this out because you can see this again and again. When a company announces a proposed secondary offering, the markets do not like it. And in many cases, it just can be the beginning of, without being exaggerating, the end. But you do want to pay attention to this. A proposed secondary offering. While it's good for the company, it allows them to have more cash flow to grow. As a shareholder, it is bad, and investors do not like that. So that is another news item. But here, again, paying attention to the position of where the stock is. The stock at this point in time, and this is the beginning of 2016 when most of the market got hammered. So like many stocks, it got deeply oversold. But at this particular bottom here, the company released earnings. They were not great earnings. However, they did guide higher for the rest of 2016. I think I said 06, but so again, we're in this deeply oversold position. That's all the news that was needed to really push this stock up. So that's why you want to pay attention. When these stocks get deeply oversold, any signs of positive news will really be an impetus for an extensive move. This is also a technical, I cover this in some of my other tutorials, reversal where it hits a low, closes the day on the top of its trading range on above average volume. That's a reversal. But again, we're looking at the position of this stock when the news comes out, as opposed to being at a high. We're down in deeply oversold positions. Here is the release of another poor earnings report, and the markets don't like it. And since then, the stock has been not doing a whole lot. I think they have a lot to digest before they get really back in the game again. But that's, again, news items and where the stock is positioned at the release. Another item to take a look at, we looked at Bristol Myers. That's a mega company, big institutions own it. What about smaller cap stocks? And this company is called Care.com. Pardon me, we're looking at a daily, and it's really only a $200 million company. And what I wanted to point out here is you can get excessive moves in smaller cap stocks for an entirely different reason. The reason is because they are small, they do not have a large number of shares outstanding, and as such, any kind of news, if shares are bought, will be much more impactful because there are not that many shares that are public and available. So in this particular case, we are looking at their first quarter earnings that came out in May. It was a strong report. The stock jumped 20%. You're not going to see a 20% move from earnings very often. I will say, I believe it was, they came in with 1 cent and 28 million in sales. So it wasn't an absolutely phenomenal number, but again, a small cap company, and it just jumps. So we did have other events occurring here, and this particular gap up in price is when Google announced at the end of June that they were going to be purchasing a majority stake in the company. So this is huge news. Again, it's a smaller cap company, and it will gap up more than normal, but this is the news item. So now it's come out. You may wonder what you would do with it next, but the stock really does not expand more beyond that. It's going to need earnings. It's going to need another driver to, after having such a huge gap up, to propel it higher. Unfortunately, in the end of July, their most recent earnings report was very mediocre. However, this Google stake is going to keep it afloat, and that's where we are now. Mobileye is a company that many of you may be familiar with. They are at the forefront of providing parts for driverless vehicles, and what I wanted to point out to you here is event-driven news, and this is something as an individual investor you might not think about, but it's a big driver. Oh, let's go back. What I'm pointing out here is at this particular juncture, Mobileye, their management, gave a presentation at the William Blair Growth Conference. Now, two things to consider. One, I've talked about this before. The stock is oversold, so this kind of news will have more impact in that case. But more importantly, when companies present at these conferences, it can be very impactful. And I can tell you from going to these conferences firsthand, oftentimes I could find just by looking, they would have many different, they're held in hotels, different meeting rooms, and the meeting rooms that were the most populated, oftentimes those stocks went on to do really quite well simply because analysts, there was a strong interest. You can stay and listen to questions. I can recall 5 years plus being in a conference, and the room for Yelp at that time, you couldn't get in. The company has struggled since then, but subsequent to that conference, the stock did really well. So presenting at these conferences can be an impetus for a stock. There is, I will tell you, Google Financial has event calendars. So they'll show you the stock, and then on the right they will tell you upcoming events if you're interested in staying on top of that kind of dynamic. But oftentimes there is an annual healthcare conference held up in San Francisco in the fall, and a lot of times you'll see these healthcare stocks pick up as money managers are listening to the presentations that are positive. So here we are. This company did respond. They were speaking very strongly and positively. You can read now. You could not do that before, but you could read these presentations. Oftentimes are being shown simultaneously to individual investors, so you could get in front of that. Here, oh my goodness, I misspoke. This is the BMW Intel news. Tesla, that news was about a home battery. Forgive me. But this particular news is Mobileye announcing that they are going to have a press conference with BMW and Intel, and sure enough, they are now working together for a BMW driverless vehicle. I apologize. The Tesla news was a home battery, but we're talking about company news, so it is relevant. In this particular case, this is a drop that came at the end of July, and in this on this particular day, Mobileye announced that they were breaking up with or parting ways from Tesla, and the stock dropped quite a bit. Now, the reality is, if you dig in, Tesla's the sales to Tesla accounted for less than 1% of Mobileye's revenue, so it really was not as impactful as this news would have you think. But the markets responded, huge volume negatively, and then subsequently has not done much since then. And then, and this next stock is NVIDIA, and this again is pointing out the real impactfulness of positive earnings and how it can get you in front of stocks early. NVIDIA has been the far and away best performer in the semiconductor space, and I'm pointing you out here in the beginning of February. This is a company that came out, as you know, the beginning of the year was dismal. They came out with strong earnings here, and at this juncture, the company by the end of the week had risen 15% on that strong earnings. What I'm pointing out here is oftentimes investors will think, well, I missed that, I need to move on. Well, the reality is these strong earnings will continue to drive a stock, and indeed this is the release of their next quarter, another very strong quarter. This stock has gone on to be a big winner. Again, bigger point, if the stock gaps up, you feel you've missed it, oftentimes you have ample time to get in and enjoy the continued uptrend from that strong earnings. can be very dicey to get in front of a stock right before earnings. On average, they go down. If it's a negative earnings report, the stock goes down twice as much as it goes up on a positive report. This most recent quarter, on average, negative reporting companies dropped 2.2%. If a company came in above estimates, it was 1.1% on average improvement in price. But these gaps up are bigger and more volume, and you really want to pay attention. Broader markets, I mentioned that I was going to discuss this, and what I wanted to point out here is this is August of last year. As many of you may recall, huge drop in the markets here because of a lot of fear, very fear-driven. China was looking weak. The FOMC was not showing their hand as far as what they were doing, and then there were global woes relative to Greece and so forth. So the markets dropped very, very precipitously. What I wanted to point out here is this will happen. As an investor, it is important that you have areas of support. In essence, if it goes lower than this certain area of support, I'm out of the markets. And this is a lot of the work that we do. We had used the, this is the end of August, but we had used prior lows as an area of support that kept investors in the markets. And then same with this beginning of the year drop, having support if it goes below a certain level. However, I will say we were much more cautious going into January because of what was occurring in December. There was a rotation out of growth into more secure stocks. And so lastly, I mentioned that I would tell you, and this is not the last chart, but what we're looking at here is the S&P, and the most highly impactful news for broader market ups and downs is monetary policy. That is the driver. So whether it is the Fed easing, tightening, the shifting of policy again and again, that is going to be your biggest driver. There will be swings based on global occurrences and so forth, but far and away your biggest driver will be the monetary policy. So what we're looking at here is the 08 into 09 banking collapse, and at this particular juncture in 09, the Federal Reserve came out and announced that they were going to be easing, making money easier so that companies can garner capital to grow, lowering interest rates, and that was very, very positive for the broader markets. QE1, you may be familiar with the terminology. And so the markets did indeed respond. 09 was a banner year, but here we did see another drop, and this was a period where the Fed was not showing their hand. They were not letting the markets know what their stand. Were they going to stop the easing? This particular month, this is a monthly chart, was when the Fed came in and announced that yes, they would be doing a second round of easing, and the markets responded. This particular drop is not related to monetary policy. This is a global turmoil that caused a big drop in the end of 2011. But here, what I'm pointing out is that this monetary policy trumped, the markets resumed. Here is the announcement of their third round of easing, and we can see how the markets have gone on to great heights. So I did want to point that out. And then here is another piece of news that it's important that you do pay attention to. In this particular case, economic indicators. As you know, each and every week the markets are always reporting different retail sales, consumer price index, and so forth. And I urge you to have a calendar on hand so that you can stay on top of these particular indicators because they will have relevance. The one that I pointed out here is housing starts. And housing starts, that number is going to tell you how many homes where construction was started, and it's a number that comes out each month. So the responding or corresponding index to that is, I'm showing the Dow Jones U.S. Home Construction Index. This is going to be the home builders, D.H. Horton, and several others are in that group. I don't know why it's slipping me right now, but let's go ahead and take a look at some of, this is the beginning of the year. We're looking at a daily chart, the drop in the markets and the subsequent reversal. But the most recent, the first one that I'm highlighting here is housing starts reported, the April numbers, that they were down. The starts dropped 8.8%, and they were now at their lowest level since last October. And the home stocks responded. This was not good news. A drop of 8.8% is large, and so home builder stocks did very poorly. In this particular case, housing starts rose 6.6%, much higher than expected, and then housing stocks responded positively. This is Brexit, so we're seeing the continued recovery from this. Now this period here, there was a huge jump in housing starts, but again, I'm taking you to how important it is where the stock is positioned. Had this news come out down here, it would have been much more impactful, but still the markets like it. Now, this more recent drop is in housing related stocks is not home starts driven. There are other things to pay attention to, and in this case, there was a fear that the FOMC would put the brakes on lower interest rates, that interest rates would rise, and as we know, interest rates are a key component of housing. As rates go up, of course, housing sales drop. So yet another piece of information and news that one needs to pay attention to. So let's go ahead and discuss some of the conclusions here. The first is, I mentioned in the beginning, be sure and have a system in place for unexpected bad news. We looked at Bristol Myers, we saw Netflix. A lot of these came out of left field. A lot of times earnings reports that are poor are unexpected. So you want to have a safety net, stop gaps, price stops, so that if a stock gets hit with bad news, you are protected. I talked about keeping a calendar of economic reports that are due. Handy. You're going to want to keep on top of that news. The other item I talked about earlier is be sure that you have an up on volume screen that you look at daily. Weekly would work as well. As you can see, some of the news is not just a one-day driver. It can drive the stock for lengthier periods of time. This last item I mentioned, know yourself. I covered quite a bit here today. There are a lot of components that go into gyrations in the market, and if you are devoted, you can put a system together, stay on top of news being just one part of the whole bigger picture. You want to know how to trade via technical analysis, and great, I do have other tutorials I would turn you toward if you are devoted. However, if you don't have the time, I would advise, as another way to educate yourself, is to subscribe to a newsletter from a seasoned pro. And I mentioned that I, among others, I put out a weekly piece that does all of that analysis as far as looking at news, paying attention to technical analysis, broader markets, and so forth, and then learn by watching a seasoned pro navigate the markets. And I did mention to you at the end I would have a very special offer, and in this particular case, a lot of the work that I do is what's called momentum trading, and in that I'm on the prowl for stocks that go up at least 100%, in some cases 1,000%, these big winning stocks. There is a system. There are ways to see when your normal stock suddenly converts to a momentum stock, what those triggers are, so that you can get in front of them. There are tons of examples as precedent that show you how you can tell when that momentum has depleted and is over. There's also one key ingredient that will put you in front of stocks that are going to have momentum for a longer period, potentially a multi-year period, as opposed to a brief period. This is been put together from my many years of teaching this system to institutions and studying the markets, and you can access it for $39. There is a link at the bottom, and you can go ahead and access that. Also on the lower right is my website if you want more information about my work. And then lastly, I will gladly go ahead and take any questions that anyone might have about these stocks that trade on news, about momentum trading. I'd be happy to answer any questions. And okay, will this be recorded and sent to registrants? Yes, the answer is that this has been recorded. Anyone who has registered for this website can access that. We'll be sending that out over the next 12 hours. As far as getting the newsletter, I do have, there is the ability to access that from my website, and for listening to this webinar, there is a promotion that you can trial the newsletter for 4 weeks for $7. When you are checking out, at the checkout, you would put the promo code $7 PROMO, and you can get 4 weeks of that newsletter for $7. Normally it is $99 per month, and that is a great way to take a look at that newsletter. It's highly regarded, and I hope you'll take advantage of that offer. And I believe that I may have covered everything. I do not see any more questions. However, you can reach me from my website or via Pro Trader Strategies should anyone else have any further questions, any other insights that they're interested in. I'd be happy to do that and answer any other questions. I'm going to go ahead and sign off now.